March numbers are bad, and they are likely to get much, much worse, according to Robert Frick, economist at Navy Federal Credit Union. Folks, this is something we have to talk about. We need to understand. According to Robert Frick, families are hunkering down because of uncertainty. Again, I do believe that uncertainty will go down is the word of the year. And I think what we are really seeing is the beginning of consumers, businesses, and investors pulling back. Q1 will likely go down as an okay quarter as you look at people pulling demand forward, trying to get in before tariffs. You had not only consumers, but businesses buying ahead. The gap, the vacuum, the air pocket in the economy will start to show up in May, in June. In fact, there has been plenty of studies about shipments out of China being canceled, being delivered half full. And it looks like we could look for empty store shelves in approximately 6 to 12 weeks, with low margin, quick selling goods being the first to go. I do want to bring on somebody special, somebody that's important in my life. This was a special request. I think it was from Laura. She said she hadn't seen Sonny in a while. Sonny is always with me. He's always down by my feet. But yes, this is my little, one of my two little Shih Tzus. Say hi to the world. Hi. Okay, go back to sleep. Go back to sleep. All right, Laura, there you go. But we got to talk about what's going on in the economy, right? We still have plenty of uncertainty. We are starting to see more and more cracks. We are starting to hear about companies really talking about layoffs. Now, these companies are typically smaller. They do not have the balance sheet of publicly traded companies. And if you don't recall, small business really is the backbone of the United States economy, right? The big boys get all the press. They get talked about on CNBC. But when you look at the goods and you look at GDP, a lion's share of that is small business. Now, some of them will be unaffected by tariffs, no doubt, but many, and I would argue probably more than you would expect, will be negatively impacted by the tariffs. Now, again, this is just part of the process. This is part of the detox. You can say good, bad, ugly. It doesn't matter to me what side. It doesn't matter to me what side you are on. People try to label me all the time, and you all don't get it. I don't care. I'm looking at the economy. I care about the economy. I'm trying to make decisions for my family on the economy, not because who is or who isn't sitting in the White House. So again, these are all the things that we have to deal with. I do think we need to talk about existing home sales. Those came out Thursday, I think, and we'd already started our session, so I only gave you the high level. There's some details underneath the covers that are important to discuss, so we'll talk about existing home sales. If you missed that episode, it was the worst March since 2009. We did an estimated 315,000 units. In March of 2009, we did 304,000. So not a great month to compare yourself to. Now, the annualized number, when you take the 315 and you work it into a 12-month calendar year, it's 4.02 million. Again, this is going exactly like I called. You guys know that I've been calling for sub 4 million. We just reported the first month of what's called the spring selling season. And this month that we are in, April and almost over, not looking much better, according to all the agents and brokers I speak with around the country. Transactions were down, frankly, 5.9% month on month and down 2.4% year on year. This is even though supply is up between 20 and 30%. First-time home buyers make up 32%. It was as low as 24%, but again, first-time home buyers in a healthy or balanced market is 40%. And again, you have to remember this 32% is on a very low quantity of sales. Price, again, the crash bros want you to believe that crash is coming. Price is up again. It's a record for March, 403,700. It is interesting to note that increases are shrinking. This really goes to the fact that I called -1 to 1% for the year. I have been calling flat. I called flat last year. I'll call flat this year. I'll call flat next year. given price elasticity, given demand supply imbalances. We just need time for this broken housing market to work out. On top of that, all cash buyers made up only 26%. That is down from 28%. So again, the broken housing market is staying broken. Folks, great news. On Friday, I think we released a video, thanks to Mark, Financial Firefighter, reacting to your comments. Some of them were spicy. Some of them were heated. Some of them were quite nice. Mark really wants to do this live. So I had a cancellation today at 10 o'clock. Dan Bird is out with it traveling, so we won't be doing Dan's session at 10, which I normally do. But we're going to go live right here on YouTube. I believe Mark will also be broadcasting it on X. We're going to go for 60 minutes. If you want to come watch, react to comments live, let's do it. Let's have some fun. 10 a.m. Pacific. I hope to see you there. We had some earnings last week, which are interesting. Google beat top line, bottom line, although YouTube ad revenue missed. They expect slight headwinds in the ad business this year. Obviously, the embargo between the U.S. and China has already dropped Chinese like Temu and whatnot from advertising. So again, they expect slight headwinds. They will just frankly sell those ads to someone else. Intel CFO saying tariffs increase the odds of a recession. Intel, I would ask you to, run your own business. I think you just announced a 20% layoff. So, focus on what you're doing because you're getting your butt kicked. Fed Kashkari, some businesses indicate preparing for possible job cuts if uncertainty continues. This is the real risk, I believe, to the economy, is the uncertain nature in small business. I think a lot of them will, try not to lay off, but eventually at some point, the cash flow statement, the income statement says you have to do it or you're going to go bankrupt. So again, interesting stuff. President Trump did expedite critical mineral mining actions last week, which again, I think is very important. Obviously, if you don't remember, China basically boycotted the U.S. from rare earths. I do believe that we as the United States need to take this as an opportunity to enter and then ultimately dominate a market. And again, I will highlight, it's not only the minerals, because they go by rare earths, but they're actually not that rare. They're all over the world. What is rare and is dominated by China is the refinement, right? Turning these, rocks into batteries and, or magnets, magnets. So that is what we need to do. I would like to see the U.S. dominate this area. It will not be immediate, but hopefully with the backing of the administration, we can spin up our own refinement and start to remove this critical choke point in our economy. These magnets, folks, go in all kinds of electronics, all kinds of EVs. It really can stop or hurt our economy. We can't have that happen. Hassett says that trade relations will be better a year from now. I don't know about you folks, but I'm hoping trade relations are better in a month, not a year. I think telling the world that this may be uncomfortable for a year is probably not the message. Certainly, I don't think it was intended that way. But when I saw that quote, I'm like, ooh, dude, you need to start talking about trade relations being better every month. They may be ideal in a year, which is fine. But we need to start messaging to the U.S. economy that it will get better from here. We have gotten to the bottom, and each and every week, each and every month will get better from here. There is real risk of losing the consumers, investors, and businesses who are holding on, who are believing if this doesn't get better soon, recession seems guaranteed. We do have Fed President Waller. I think he's out auditioning for a job. Based on some of the comments, Fed President Waller is saying, I think he wants to be the next Fed president. He is basically whispering sweet nothings in President Trump's ear. What do I mean by that? Let's give you, which one do I want to start with? I'll just read them all. What the heck? Data focus brings risk of being late on policy. I think Trump would totally agree. President Trump has been quite adamant that Powell and team are late. Fed President Waller is saying, guys, pay attention. We're talking soft and hard data. If we depend on the hard data that's lagging, we're going to be late. I think Fed President Waller gets a thumbs up for that. Rate cuts could come from rising unemployment. Basically, what he's saying there is, folks, be careful what you wish for. It will take courage to see tariffs as transitory. Again, Fed President Waller is pretty adamant that tariffs will lead to a one-time step up in cost, but not continue, right? They go up, call it 10% this year, but they won't go up another 10% next year, which Fed President Waller wants to remind you is transitory. Again, I wish they would pick a different word, but hey, small details. Finally, tariffs could push unemployment up quickly. One more comment I just noted, not likely that by July there will be clear tariff impact. So basically, I think what Waller is saying, given the current process, no May rate cut, likely no June rate cut, but maybe in July. We did get a new member of our school community, which I greatly appreciate. Shout out, Scott. Again, folks, I don't know why you're not a part of it. We are actually doing a session in 19 minutes with Stephen Dow from Velocity Mortgage. We're going to talk about creative financing, 90% CLTV, 50-40-10. We've invited all school members and everybody who has ever bought my course, How to Get Started One Rental at a Time. I suspect that the Zoom call will be pretty crowded, but that's what we want. We want people talking about it. I have said on record, and the video came out over the weekend, that the 90% CLTV, combined loan to value loan, will likely become the number one loan for investors who can find sellers with equity. This is going to be a great tool. And again, I want all of you on the call so you can ask your questions. Sometimes when you're in the noise all the day like me, I miss the obvious questions. So this is important. And just so you know, next Sunday, we're going to have the CEO of Property Radar on to talk about how to use the tool, how mom and pop investors like myself could use mailers and things of that nature to highlight their buy box. So again, 2 upcoming exciting sessions inside school with a lot of folks. So hopefully you appreciate that. We did see that plane tickets are getting cheaper as domestic travel weakens, AKA, folks, deflation, not inflation, not disinflation, deflation. This is what I think is coming. This is what I think the Fed is missing. I've said it before and I'll say it again. I believe the Fed is underestimating the amount of demand destruction. What we are likely to see in the summer months is inventories stack up. And you're going to see companies like airlines have to cut prices to move inventory. That is deflation. That is not inflation, which the Fed is currently worried about. A couple more topics before we wrap this up and get ready for our school session. Gen Z workers, shout out Gen Z, increasingly opting out of college and moving into the trades. I have said before in past videos that I think Gen Z has it right. They are not inundated with this notion of thou shalt go to college or you are a loser. In fact, they are seeing millennials with hundreds of thousands of debt not be able to get a job. So the more Gen Z that goes into the trades, the better. Again, we have an aging population. When I look at my team in Fresno, both first and second tier, the average age is over 60. So we certainly need Gen Z to roll in, pick up the trades, and frankly, print money. All right, where we are seeing weakness in white-collar jobs, the trades are really picking up, and I think Gen Z is leading the force. There are 2 million fewer students in college today than 2011. Again, I think that is a good thing. I think college for a lot of people is not a good investment. Notice I didn't say everyone. I said a lot of people. It is obviously amazing if you want to go be a doctor, a lawyer, engineer, things of that nature. It's kind of a prereq. But there are lots of degrees that do not have a financial return. Gen Z, as of today, makes up 18% of the workforce in the trades. I think that number will only go higher from here. Let's set the stage for next week. We got a lot of data. Next week's is jobs, jobs, jobs. On Tuesday, we will get Case-Shiller. Always remember that Case-Shiller is kind of outdated. It's for February. Last month, we had 4.7% increase in price. I do expect that to go lower. I think it will generally, throughout the year, go down and ultimately be zero or very close to zero. We do get consumer confidence on Tuesday, which will be important. Last time it was 92.9, expected to go down to 87. What are consumers thinking? Again, the Fed would call this soft data, not hard, but that's okay. And then we will get the JOLTS report. The JOLTS report, basically job openings is the number I look at. It did peak at over 10 million. Last month was down to 7.6, expected to go lower to 7.4. Wednesday, we will get ADP. ADP report talking about private payrolls. Last month growth was 155, expected to come down to 110. We will get PCE as well. PCE is going to be one. This is inflation. Headline is expected to drop to 2.2. That's damn near close to Fed target. It was 2.5. Core, which again is the number the Fed cares about, was 2.8, expected to come down to 2.5. So again, inflation going the right direction. Lastly, on Wednesday, we will get pending home sales. It'll be interesting to see where that is at. Thursday, of course, we get weekly claims, which again are expected to be around 225, and auto sales. And then finally, the big number of the week, non-farm payrolls, expected to be 130,000, was 228,000 last month, with the unemployment rate staying steady at 4.2%. So again, folks, that's what we got for the daily financial news. We will be back tomorrow at 7:30. If you have or use Spotify, do me a favor, check out One Rental at a Time. Go ahead and give me a follow. All the videos that are on YouTube will go on Spotify, so you can take a look there. Again, if you are in the school community or have ever bought my course, How to Get Started One Rental at a Time, you should have an email from me to attend a Zoom call that starts in about 13 minutes. And I hope to see you there. And again, at 10 a.m., so what would that be? 2 hours and 13 minutes, we will be going live with Mark, the Financial Firefighter, reacting to all of your spicy comments. All right, folks, take care. I will see you tomorrow morning. Bye.